Okay, guys, today we're going to be talking about mitigation block and breakers and also the differences. And then we're going to talk about QML at the end of this section. But the first thing that we're going to focus on is the breaker, and then we go to mitigation block. So here are the drawings. After these drawings, I'm going to take you to our live chart so that you get to make sense of what we're going to talk about, because it's not enough to just show you drawings and stuff like that. So I also need to go back to the chart and show you what's there. Okay, so the first thing that we're gonna look at, it's simple. Just look at this point, the significant point, or I think the point that will differentiate between mitigation block and a breaker. It's simply gonna be this point A. Okay, so if you get to look at this level, we get to see that price come and take out this level. Okay, so buy side liquidity simply being collected here, and then price after that it went down low. Okay, so for this case also we also get to see that at point A, price collect the sell side liquidity that is resting here and then go up high, and then we get to make our entry here. Okay, and then also that's the same thing that gets to happen. We get to make our sell entry here, and then we get to make our buy entries here. Okay, so this is the structure of a breaker. So when we are talking about a breaker, we are talking about something like this. Okay, so for this structure to be a breaker, we need to see price collecting liquidity at point A. Okay, so that's the difference between a breaker and a mitigation. So let's quickly look at the mitigation before we come back to this breaker so that you can understand. Okay, let me just skip this, come back to it, and look at a mitigation. So when it comes to a mitigation, we get to see that we have what? We have a failure swing. Okay, so price failed to collect liquidity at point A. Okay, so that's a mitigation block. Okay, but if it's a breaker, we get to see that price come up and collect liquidity at this level. But since it's a breaker, we have a failure swing, or we have price failing to collect liquidity at this point A. Okay, so that's a mitigation block. So let's go back and look at it again. So here is our breaker here. We get to see that price collected liquidity at point A, okay, and then went down and then come back, and then we make our sell entry at this level. That's where we make our sell entry here. And also same thing here, it's just an upside down structure of this one. Same thing that you get to see here. Price come down, collect the sell side liquidity that is resting here, and then it come up here and then reprice lower and then continue to go up. Okay, so you're gonna make your entry here at this level. Okay, so that's the difference between a breaker and a mitigation. When it comes to a breaker, we have price collecting liquidity, and then when it comes to a mitigation block, we have a failure swing, or we have price failing to create a higher high. But when it comes to a breaker, we have price creating a higher high, meaning taking out the previous high. Okay, so that's the difference between a breaker and a mitigation, and I hope you get it. So if you don't get this, make sure that you try to write down everything that I've just said before we go to the examples and everything. So let's look at what we have here. So we get to see that our price is coming from this level and price is going up. Okay, when price is going up, it forms a high here and get to drop. Okay, and then price come back to this level, it take out this high that we see here, and we get to see price dropping. Okay, so by reasoning of price taking out this previous recent high that was being formed here, which is going to be our point A, you remember? So this simply means it's a breaker structure, okay, that we are looking at, and we expect price to come at this level and we make our sell entry. Okay, so we're gonna draw a line like this. So we get to see that price got to our breaker. And what did price do? It sell. Okay. So when price get to this level, we see a sell taking place. Okay. So also at the same time now, remember we were looking at the bigger picture of this, just the bigger picture of this. Okay. Just the bigger picture of this. That's where we have a break. But if we can look at the smaller picture, starting from here, you see here, we have starting from point 2, we see here we have a low here, and then we see price creating a high, and then we see price coming back, and then we see price failing to create a higher high, or we see a failure swing in the market. So if we can consider this small structure here, at the same time, it's also what? It's also a mitigation. Although I made a mistake here and I've written breaker, please forgive me for that. It's a mitigation. If you consider from here, this structure, it's a mitigation. Okay, so we're gonna put a line here. So when price get to this level, we're gonna be selling, and we see price sold. Okay, and even if you can go back to this YouTube channel, you can actually get to see where we talk about those setups. I think is in 2020 around November. I've given a lot of setups. Yeah, before it even happened, all of this was something that we traded. So it's not like I'm just telling you about something that has already happened. We actually took advantage of these setups. So back to what I was saying, guys. If you look at this small structure here, you get to see that this is a mitigation. Just forgive me for writing breaker here. I made a mistake, okay? So it's supposed to be mitigation here and then breaker here, okay? So I hope you understand. If you don't understand, just get to look for there is a link on the description for my YouTube channel, for my Telegram channel where you can get me. So let's go to the next example and see what we have. So it's actually the same pair. It's Euro NZD. I've just zoomed in here and also changed the time frame. Okay, so this is the same thing that I've been showing you. So now let's go to the next slide that we have. So we get to see this is our point A. So price came at this level and it took out our point A here. So we have a lower low being formed, okay? So the moment we see the sell side liquidity being collected at point A, that simply means it's a breaker, okay? So we definitely know this is our break, okay? So we're gonna put our line here at point B. When price get to this level, we're gonna be buying. And price got to this level, and this is what we see, price is going up. Okay. So simple stuff like that. You don't need to complicate anything, okay? So let's go to another example. Okay. We have let's say these are point A. We get to see price coming at this level and taking out our liquidity that is resting here. All the sell side liquidity is being collected here, and then price begin to change direction and went up. Okay, so this is gonna be our breaker level where we're gonna expect to make our buy entry. So when we get to this level, we get to see price buy. Okay, so at the same time, if we can look at this level here, going down here, we get to see that we have a breaker structure. Okay, so when we get to look at here, we get to see that this is a breaker. Okay, so price came at this level and got to buy. And then what you can notice every time when there is a breaker, we get to catch these big moves and stuff like that. So this is something that works. It's not something that you're just taking chances. So now let's talk about the mitigation block. Okay, so looking at what we have here, looking at what we have here. Remember, I say the mitigation block, we're gonna have a failure swing, okay? Meaning price will not collect the buy side liquidity that is resting here on point A, okay? And also price will not collect the sell side liquidity that is resting on point A here, okay? So this is the same structure, just vice versa. So if you get to see here, we're gonna enter at point B, okay? These are mitigation. So the difference between mitigation and a breaker block, a mitigation block has a failure swing while a breaker, there is a stop run, okay? So That's the only difference now. Let's go to our examples, okay? So we get to look at our examples here. We get to see that our price has created a higher high here at this level, and we get to see our failure swing and price continue to go down. So definitely, when we get to this level, we say this is gonna be our white, this is gonna be our mitigation block, okay? And then same thing that we get to see here. If you take from this high here, price failed to come back here and collect liquidity that is resting here. Okay. So definitely this is gonna be our this is gonna be our mitigation block. Okay. So we get to see price coming at this level and price get to drop. Okay. Let's go back. Let's go forward. Same thing that we get to see here. We get to see price creating a high here and then failing to take out this high that it has created and continue to go down. So this is gonna be a mitigation block. So when price get to this level, we're gonna expect to sell, and indeed price sold. Okay. So this is the same thing that we get to see here. When price get to this level, we're gonna expect to buy, and we bought. Okay. So same thing that you see here. Price created this high. It tried to come back but failed to collect liquidity here, and then dropped, and then came back to a mitigation block, and we get to see price dropping. Okay. So let's go forward now. Same thing that we get to see here. Price created this higher high that is here, tried to come back but failed to collect our buy side liquidity that is resting here, and price drops. So this is gonna be our entry point of the mitigation block. So we enter here, price continue to go down. Okay. So also same thing here. I even shared also this, if you can check on the previous analysis, I've shared this analysis before everything happened, because this is actually a screenshot of after and before. So if you can go back, you can actually see me making predictions about this. On this was Nasdaq 100. Yeah, this is Nasdaq 100. So you get to see that the things that I'm telling you, it's actually the things that I'm trading, some of them. So basically, that's what happens here. We were having what we are having a mitigation block, okay? Because if you can actually go to a smaller time frame, you can see that we have two highs here, okay? We have a smaller, we have a higher high, and then we have a failure swing, okay? So this is a mitigation if you can go to a smaller time frame. Then we get to see price getting to this level, and then we get to see price going down, okay? So these was our TP1 and these are TP2. And a lot of people have been asking me about this move. How did I catch it? I just told you. So now let's look at a breaker, eh? Because when you look at the breaker, it's almost similar to a QML, okay? So a lot of times when price get to this level of our breaker, we get to see price going up, okay? So if price gets to go up, most of the time what happens, you find that there is an institutional reference point that is resting on this low, okay? So price sometimes will fail to take out this low that is here and quickly go up. And when price go up, it will come and take out this recent high that has been formed, okay? So this is the scenario that you see. Price went down. As it goes down here, it failed to take out this low because there is an institutional reference point, and we get to see price going up. The moment we get to see price going up like this, we definitely know that this area here is going to be taken out, okay? Even if we get to say we have our institutional reference points, we're going to ignore it, okay? Because based on order flow, this area needs to be taken out, okay? So price is going to continue to go up and take out this area here. So we're not going to indicate any supply here at this level, because price needs to take out this level. Okay, so if you don't know what I'm talking about when I say price needs to take out this level, you need to go to the previous video where I talk about supply and demand, actually how to identify an area is a supply or demand, because there is this misconception that each and every high, previous highs and previous lows that we see in the market are actually supplies and demand. So people are just marking those areas, whereas that's not the case. Okay, there are actually conditions why we say this is a supply and this is a demand. Okay, so you need to go back and watch that video so that you get to understand why I'm saying this area needs to be taken out. Okay, so we get to see price coming at this level, and when price get to this level, these are level of our QML. Now this structure, when you see it now, it's a QML structure. Okay, so price get to this level and we get to see price selling, simple stuff like that. Okay, so you take advantage of these things. Okay, so most of the time some people say it's FTR, they say it's FTR. The reason we say it's FTR is simply failure to retest. So it's simply failure to retest here. Okay, so now you get to know why price failed to come here is because we have a what, we have a breaker at this level. That's why price failed to retest here. So then we're gonna have an FTR. Okay, so when price will go back a little bit and then come back, take out this and then come to this level of our QML, and then we make an entry. Okay, so it start as a breaker and then it can end up as a QML. Okay, so that's what happen most of the time. It will start as a breaker and end up as a QML. That's what happens most of the time. It's just that most people, they know the QML part, not the breaker part. But if you can really give yourself time and look at this thing, you get to see that it will start as a breaker most of the time. Okay, so let's just switch and go back to our charts, just to have more example. So if there is anything that you don't understand, don't worry, just catch me on my DM. Okay, let's look at something that we have here. So if you look here, we get to see that we have a market here that has formed a high here at this level, and price went low and came back and took out this high. So since price took out this high and then it went back and took out everything that we have, we get to see that this is our breaker now. So we're gonna highlight this level here. Okay, so we highlight this level. So this is our breaker. So that means when price get to this level, we're gonna sell at this level. Okay, price get to this level, we're gonna sell. And then we also have something here which is our QML. We have something which is our QML. So you get to see what I was showing you right now on the last slide that we have. It will start as a breaker and end up as a QML. Simple stuff like that. There is nothing complicated, there is nothing difficult about that. These are the basic things that you need to follow on the market. Don't be on the wrong side of these things. Okay, so let's look at this. For those of you who are not well equipped, let me just draw this. Okay, let me just put this. Just look at this. Price came to this level. Okay, when price get to this level, it formed something like this, and then we have price coming up, then we have price going down. Okay, and then we have price coming up and failed to touch our what, to touch our breaker here, but that doesn't mean price will not come back for it. Price will simply come back for it, and then boom, we have price coming back for our breaker. Okay, so then now we get to see price dropping after that, and after the drop, what happens? Price come and collect liquidity here at this level. You remember what I said? It shoots up straight, get to our QML level, and then we get to see price decline massively. Okay, so this is one of the things that you need to keep in mind always when you before you talk about the QML, before price can actually get to your level of your QML that you are expecting. Most of the time you're gonna find a breaker or a mitigation block, but most of the time it's a breaker, not a mitigation block. Okay, it's a breaker. Sorry about that. So then let's go to look at something else here that we might have. Let's just look at something that we have here. It's the same thing that we have here. We get to see that price has formed a structure here. This is a high, went down, came back and take it. So it's a breaker. So we indicate this level as our breaker. So these are level as our breaker. And then these are level as our QML, okay? So price get to this level and we get to see price dropping. There is nothing difficult about Forex. Trust me, people just complicate things. So this is it. It's easy to make money. Just follow everything that I'm teaching you in this channel. It's easy. And I know a lot of people, they like to have different mentors and stuff like that. But at the same time, it can work against you when you have a lot of information, and some of the information that is flooded out there, it's not really working out. So be careful about having a lot of people that you are watching, okay, that you are relying on based on market analysis. So just be careful around that, okay? So this is the simple thing, guys, simple thing. I don't know if there is anyone who doesn't understand this. If you don't understand anything, just make sure you text me, and also make sure that you subscribe to my website, okay, so that you, every time when I make a blog about something, you will get to be notified via email, okay? So without any waste of time, guys, I think I should call this a day. I think we are done here. I think we are done here. Bye.